Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
Good morning. Taking a look at some Bitcoin, the CoinDesk Bitcoin price XPX index is at $38,406. Bitcoin slightly retreating, but trading flat overall, but 1.3% down over the past 24 hours. The CoinDesk Ether price ETX index is at 2777. ETH also slightly down, about 0.4%. And the DFX CoinDesk's DeFi index 314 trading pretty flat. All right. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, we did breach the 37,000 level with Bitcoin. What are your thoughts on the markets?
Yeah, 39 even, but not 40. And so
not 40.
That's still like that.
Uh-oh.
Yeah, I don't. People have the attention span of a squirrel, but I don't know if everyone remembers that 40 used to be the support level, and now it's the resistance level in Bitcoin.
Mm-hmm.
So we still haven't broken that yet, and I'm not sure what to make of it other than until that happens, you can't convince me that
we're stuck in this range for a while.
You haven't convinced me it's exactly rebounded yet either. So when that happens, then we could talk.
Emily, what are you looking at?
Yeah, just some interesting global news. We have all this news from India, which we'll get into in a minute, but also an interesting report from Japan, originally reported by Bloomberg, that Japan is looking to ease its restrictions potentially on token listings. This is important because Japan is a nearly $1 trillion crypto market, and it's really hard to list tokens there. It can take up to 6 months to list just one token, and now they're weighing the possibility of listing, a dozen tokens at once. So it's actually quite a big deal for a very important crypto market.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, in other news, if you can't beat them, join them. Grayscale Investments is putting their Bitcoin spot ETF on the back burner in favor of launching the Future of Finance ETF, which tracks crypto-oriented companies like PayPal, Coinbase, Block, Silvergate, miners like Argo, and more. Joining us now is David LaValle, Senior Managing Director and Global Head of ETFs at Grayscale Investments, a CoinDesk sister company. Welcome, David. Thanks for joining us. So just before we get into this new ETF, and first for Grayscale that you guys have launched, I want to just get your markets outlook.
Yeah, well, first of all, thanks so much for having me on today. I really appreciate it. Look, I'm an ETF guy, so I'm really not here to prognosticate about where we're going to go with crypto prices overall, but we're super excited to launch GFOF, the Grayscale Future of Finance ETF. And I wouldn't say that we're putting GBTC's conversion on the back burner, but working in parallel tracks, obviously putting a lot of attention towards the GBTC conversion, but extremely excited today to be launching our first equity ETF. And we're very excited to really offer a diversified product for our investors.
Hey, David. So this new ETF that you have, it has what you're saying there are 3 pillars to the future of finance. So how is it weighted exactly? I mean, there are not a lot of companies in it, correct? And so how are you weighting this ETF?
So maybe we'll start by talking about what this product is not. I think it's clearly not a Bitcoin replication product. It's not another thematic blockchain ETF. We're not, putting companies in this like, Tesla or other companies that are holding Bitcoin on their balance sheet. We're clearly not putting technology companies like semiconductors, which are powering, some of the mining rigs. And we're certainly not putting, broad-based payment processors in there like Microsoft and Visa. And so when you look at some of the other products in the marketplace that we would consider to be, blockchain thematic products, this is not that. This is about defining a new theme. And that new theme is the digital economy. And we're talking about the cross-section of finance and technology. And we're really talking about 3 pillars, which is the financial foundations of the market. We're talking about technology solutions, and we're talking about the digital asset infrastructure in the marketplace.
Mm-hmm. So this is Grayscale's first ETF product. It tracks the Bloomberg Grayscale Future of Finance Index. Is this a placeholder until a Bitcoin spot ETF sees the light of day?
I wouldn't say that it's a placeholder. Again, we're running, and building a world-class ETF issuer, and that's going to take advantage of how nimble we are in terms of bringing products to market quickly, in addition to our ability to, really meet investor demand. Clearly, there's investor demand for a spot Bitcoin ETF, and clearly we're putting a lot of attention towards that. We have a filing in with the SEC that is being, currently reviewed and is open to public comment right now. But we see the opportunity to take advantage of, defining the digital economy and really offering our investors an opportunity to participate in the growth of the digital economy and participate in the opportunity for new companies to really come into the digital economy. And the way we've built this index is really built to be able to capture that growth and capture those new companies that will be, coming into the marketplace over the next decade.
So I'm sure your goal obviously is to attract the widest pool of investors possible, but this seems like there are two separate groups, and I'm just curious if you think one will outweigh the other. One is just the investor that's already in the crypto markets and just kind of wants to add and add another product. And then the other are the people that are really nervous about investing directly into crypto because of fears of volatility and might be more attracted to this kind of ETF. Do you think one of those groups will be more, you'll have more of one of those groups than the other?
So I actually think the beauty of this product is it really attracts all. I think thematic investing and the growth of thematic ETFs have been historically something that has been attractive to retail investors and financial advisors for allocations to their clients' portfolios. When you start thinking about, cloud computing in 2012, robotics and automation in 2013, 5G, at the time that those products were coming to market, they weren't really well-defined themes. And so this is another example of a new theme, a cutting edge theme, a bleeding edge theme coming to market where we're really going to capture the future of what this will be defined as. And thematic investing in ETFs has shifted over time. Initially, as I mentioned, financial advisors and self-directed retail investors were attracted. But as the theme has, grown and the theme has really become defined in popularity, it's become an institutional opportunity for investment. If you think about cloud computing in 2012, AWS was less than 2% of Amazon's revenues at that point in time. And now we all know that it's more than half of their revenues. And so at that point in time, the theme in cloud computing more generally really hadn't been well defined. I think this is another opportunity. Grayscale's Future of Finance ETF is going to define the digital economy and then also offer an opportunity for a very broad range of investors.
Yeah, point well taken. I guess just one question is that, one of the reasons that some people are uncertain about investing directly into crypto is the roller coaster like volatility. Do you think this ETF will offer any kind of hedge against that?
I don't know if it'll be a hedge against volatility, but what it will be is it'll be the opportunity for investors to really, get into the infrastructure of the digital economy and, not investing directly into the assets themselves and not directly investing into an ETF that is built to replicate the performance of Bitcoin and other digital assets. And so as this digital economy grows, as the more and more companies that are currently adjacent to the digital asset infrastructure or adjacent to the digital asset market really become incorporated and intertwined into the digital economy, this product will capture that. And so regardless of the regulatory headwinds, the volatility in the marketplace, this product is really going to do a good job of offering investors a very nice growth opportunity in the market.
So Dave, the GBTC discount, we got to talk about it. It's now at about 25%. The carry trade is pretty much dead. So the market seems to be saying give up on the idea of this ever becoming an ETF. We all hope for a messianic age, but at the same time, we got to be realists. How far out do you think, in realistic terms, how far out do you think it'll be before you're going to get an approval on turning that into an ETF? Or do you think you just got to wait for Gensler to leave?
Well, look, we're actively engaged with the SEC. We're within our 240-day clock that the SEC has for these types of filings. We have an open comment period with the SEC, and we're waiting for early July when that 240-day clock expires for the SEC to make a final ruling. We feel really strong about the case we've made, and we still stand true to the point that if there's an ability for a Bitcoin futures ETF to be in the marketplace, we believe that it's perfectly reasonable to approve a spot Bitcoin ETF as well.
The SEC has just issued a notice to Bitwise to address concerns about their proposed spot Bitcoin ETF. Particularly, they wanted them to address concerns over fraud as well as manipulation. I wonder if you were to address the SEC about those concerns, what would you say?
Yeah, so the surveillance agreements and, broad-based manipulation, when we take a look at the products that are currently approved in the marketplace and we take a look at the product, our product, the underpinning of the index, there's very similar, exposures and very similar pricing mechanisms. And so any concerns that the SEC has raised around manipulation, around maturity of the market, or around, surveillance agreements, we feel like they have gotten comfortable with the Bitcoin futures products that are in the marketplace. And given the similarities between our products and given the similarities in the pricing mechanisms associated with it, we believe they should be comfortable with the way our product is structured.
All right. David, congratulations on the first ETF at Grayscale, and looking forward to seeing if that spot ETF ever comes to fruition, or maybe we just need to wait till Gary Gensler leaves. Thank you, David. That was Grayscale Investments Senior Managing Director David LaValle. Coming up, the Crypto Council for Innovation announces Chief Executive Officer Sheila Warren, who is also the co-host of CoinDesk's Money ReImagined.
What's up, everybody? This is Spencer Dinwiddie.
And I'm Solo Ceesay.
And this is New Money, brought to you by CoinDesk.
All I hear, go get the money. So I go get it. Hate means I do something right. So I'ma let him. Yeah, I'ma let him. Yeah, I'ma let him. I hit the nail on the head. Yeah, I'ma let him.
What we'll see is money not only being exchanged for this digital currency, but the frictionless movement across borders. It's gonna be able to flow as easy as a text message.
Staying true to yourself, right? Like, you've always been true to yourself.
I just want to share that with everybody. You could be yourself in full capacity.
It's our duty to take our visions and be fearless in our pursuit.
Be my most authentic self and show people that, look, I'm an athlete, and yes, I'm also part of the LGBT community.
My goal is to have, my own NFT, my own entire IP, like my own everything.
How do you think, blockchain and crypto impacts the way you think about it?
I think everyone has some sort of how'd you get into Bitcoin? It's like asking someone if they smoke. It's like, yo.
Embracing where the world is going. And when the whole world shut down, we saw just how important tech was.
It was more so of my style and the foods that I cooked that kind of pushed me. I wanted to live the lifestyle of an athlete or an artist while doing what I love.
Having that open mind, having that flexibility just allows you to be of so much more service to, youth or society in general.
Gamers, maybe it's because you guys just hustle different.
Anything you want to be great at, you got to put hours and hours in every single day.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XPX index currently at $38,430. Bitcoin slightly down over the past 24 hours, about 1.4%. The CoinDesk Ether price ETX index 2776. ETH also slightly down, about 0.5%, trading pretty flat overall. And the DFX CoinDesk DeFi index is at 314. Very flat right now as well. All right. Former World Economic Forum executive Sheila Warren is now CEO of the Crypto Council for Innovation, a Washington-based lobbying group. Warren will be responsible for leading the discussion of crypto on behalf of the CCIE by communicating its benefits to policymakers and regulators. She's also a co-host of CoinDesk TV's Money ReImagined. Joining us is Sheila Warren in San Francisco. Good morning, Sheila. Thanks for waking up bright and early for us. So I wonder what inspired you to make this transition, and how is it different from your previous role at the World Economic Forum?
Thanks for having me, Christine. It's always a pleasure to see you. Yeah, it was the right time. I mean, it was very clear to me for the past year that things were brewing, not just in Washington, but all around the world, and that we were at a time where over the next honestly, 6 months to 2 years, we're just going to see tremendous activity that either promotes blockchain and promotes crypto, or that kind of kills it. And that's going to be dependent on where you are in the world. So I felt like it was time to kind of jump in with both feet and really just be a voice advocating on behalf of this open ecosystem that we all think is so important.
Oh, Emily, you're on mute.
Sorry. What are some of the biggest challenges in conveying that message to Washington policymakers? Is it just like a lack of understanding of crypto? Is it just that people still associate crypto with crime and the dark web? I mean, what would you say are the main obstacles to overcome in convincing Washington policymakers that crypto is actually good for the United States?
Well, I think it's everything that you've just said. I think, frankly, in earlier years, the industry hasn't done itself a lot of favors. We haven't really taken the effort, I think, to meet with people where they were. There's been a lot of education that's been done over the past couple of years, part of which I have helped to do here when I was at the World Economic Forum, and will continue to do here at CCI. But I think that we haven't really made the case. And so with some people we have, with others it remains to be done. And so I think that there is still perception, that some outmoded perceptions about crime. There's a lot of misperception about energy, all the standard kind of tropes that you hear. And it's really up to all of us to be building an evidence-based case and really showing and demonstrating that even if that were true at one point in time, it certainly isn't the case now.
So, Sheila, it seems to me that there's sort of two separate problems here. One is that, yes, we haven't clearly articulated the case for crypto, but then the other problem is, how do you convince policymakers that this is something worth fighting for? There's so many things on their agenda, and, this, as of now, this isn't really an election issue. So how do you convince policymakers that this is urgent enough for them to put some skin in the game?
Part of that, I think, is on all of us who are involved in the crypto ecosystem to actually make that case and reach out. So I think we do need some grassroots activity from voters saying this is important. And here's where it falls in my list of priorities as a voter. That's something I think that we're going to be looking into at CCI to think about, how do we activate that base? How do we get people to understand that their constituents are paying attention to this and they do think it's really important? And then on the other hand, I think that you're right. It's an election cycle going into the midterms here. And so how do we make sure that crypto remains something that is not killed or kind of forgotten about in the midst of all the politicking that's going to be happening, that's already starting? I think there we have to look around the world and say, look, the United States has an opportunity to be a leader in this space, or to continue to be a follower, or at worst, where we really have been, not paying enough attention at all. And if we don't, someone else is going to take advantage of the tremendous growth of the economy that this is going to bring as an industry and jump on it. And so it's kind of now or never. So whether or not it may fall in the top priorities for any particular constituents, any particular politician's constituency, this is going to be a missed opportunity that we're all going to have to take very seriously, because we don't want to look back 5 years from now and think, oh, there was that tremendous growth engine and we just let it go.
Sheila, there are a couple of parts of the crypto industry that are worrisome to members of Congress and to regulators, namely crypto lending and stablecoins, and the assets that are backing stablecoins and the lack of transparency. So what exactly is CCI's approach to that? Does it have an approach? And how should it be dealt with by Congress, by regulators? And what are you going to do to deal with it?
Yeah, well, my hope is that we can kind of move beyond this very pointed focus on stablecoins that's been happening, because I think we kind of landed the point there, in my view. And there's been a lot of, I think, evidence-based case made already. And there seems to be pretty strong understanding of stablecoins and some of the complications there, which you're alluding to, like what is actually backing kind of the value there. So I think the understanding is there. I think it's a matter of just landing some final, kind of guidance from these various bodies that's going to help us move forward. That being said, I think that this is where a lot of the confusion comes up. There isn't a clear understanding in my mind about the differences between even the basics of a CBDC, a stablecoin, and crypto. This is not really clearly understood, and there's a lot of equation of this thing with that thing, and they're all the same, and why does it matter? If we're going to have a digital dollar and the Fed's going to do that, then why do we care about anything else? So I think we do have to continue to articulate these are not the same thing. They have different purposes. They were derived for different uses, and so how do we make that crystal clear so that these policymakers understand what exactly it is they're going to be providing guidance on when, and they can provide adequate guidance. But yeah, to your point, I think that there's a lot of mixing of things that are going on here. And part of what we want to do is create almost clarity, but almost swim lanes to say, here's where this thing will be affected by regulation of the other thing, and here's where it won't be.
The issue about stablecoins, though, is that it hasn't been really settled, or nothing seems to be settled. And I do think that the Congress does understand the difference between the CBDCs and stablecoins. But what their issue is that there is no sense of how is it going to be regulated and by whom? And can it be? Is it a bank? Is it a security? Is it what? Where does it fall? So where does CCI come in to say, look, we think, guys, this should be regulated by the OCC. This should be done by the SEC. Where do you guys fall in this? How are you guiding that? And then also to the question about crypto lending, where do you fall on there? Because there are a lot of questions as to whether or not this is essentially a form of security by guaranteeing these rates or making it sound like they're guaranteeing high rates to consumers. And ultimately, the regulators have the consumers, the average Joe in America, who's putting their money into this in mind. So where does CCI fall when it comes to that aspect of the crypto markets?
Yeah, I think one of the biggest problems we have here is agency, I don't even want to call it competition, but just confusion around who is regulating what and where do these things belong. And we're really hoping that this executive order provides some clarity, or at least requires coordination across these agencies. Because right now, depending on who you talk to, there's either almost competition to be the one that's got oversight, or there's almost a desire to not be the one that's got oversight. And that's almost person by person, not even agency by agency. So even within the agencies, you've got different points of view that are emerging as to what oversight should fall where. Our view is that we need to understand that. Our view is primarily pulling up a level. We need clarity from these agencies about who is going to do what. Now, in terms of our view, there's pros and cons to each agency having oversight of different things. And so that's all kind of well understood. Our view is that we just need that clarity to understand who we need to go to when, and which issuer is going to be going where for what. So right now, what we're seeing, to your point, I actually don't agree that there's a lot of clarity between the difference between a digital dollar and stablecoin. I still hear questions about, well, why do we need a USDC, for example, if we're going to have something that the Fed is working with directly? I think there's understanding those are not the same thing for obvious reasons. Like one is fiat and one is not. Nevertheless, the uses are not fully understood, is what I'm still hearing from people. And I think there's still education we have to do there. But I also think that part of what we need to do is just see, can we get these agencies to cooperate? Because at the end of the day, I don't think we're going to get one regulator that's looking after everything. We're going to have coordinated action by these different agencies, which means that their broad frame on what these things are and what they aren't and what their potential is and trajectory is going to have to be common. Otherwise, we're regulating the tail of the elephant and the head of the elephant, and those are not the same thing. Even though we know it's an elephant, it's going to wind up looking very, very different and at cross purposes.
Yeah. Just looking at last year, the CCI hosted the B Word conference. It had a huge headlining series of guests, including Jack Dorsey, Elon Musk, Cathie Wood. Have you met with them, and do you plan to work with them in any way going forward?
Yeah, so some of those organizations are members of CCI, and there is conversation happening right now about whether or not another conference makes sense. I think that was a hugely successful conference. It had, obviously, as you know, got a lot of attention, and I think it did help land certain cases around certain topics. Energy was one, but also just kind of the various uses of Bitcoin, whether it's for human rights and advocacy, whether it's for cross-border payments, whatever it might be. The privacy elements, all those kinds of things, I think were really well received. And so the question becomes, who would the audience be for such an event this coming year? We haven't fully decided yet exactly if we're going to go forward with that conference, but there's certainly conversation underway because we can see the value.
Sheila, if you were to outline your 3 top priorities or things that you'd like to get accomplished with CCI this year and have folks in DC understand, what would they be?
So first of all, I'd say it's DC and beyond. I think we do want to make the case globally to all those who are in a position to shape the enabling environment in which crypto is operating, that crypto is not only here to stay, it is going to be a tool of tremendous financial growth. It's going to help drive financial inclusion. And really what we're looking to do is just change the global public perception. That's going to start not just with policymakers, but also with people on the ground who are going to be people who are quite influential, that their use is going to influence the politicians with their constituents to kind of say, this is something that we care about and is really important. So I'd say for top 3, it's really continuing to make that case using evidence that, look, we're not only here to stay, there's been positive impact, there's more coming. Number two, really pointing out that there's going to be some jurisdictional clash here. And so what we want to push for is a more globally coordinated effort, leaving aside even the own complications of our own agencies here in the United States. We need to be thinking globally because this is a global technology and it's not going to be specifically located in only one jurisdiction. So how do we help support that global coordination? And then third, I would say it's really to unify crypto stakeholders. So I do think CCIE tries to speak on behalf of the crypto ecosystem. We're here really for all open permissionless, decentralized blockchains. And we want to make the case that regardless of which specific protocol or a specific company or whatnot, there's something about this value proposition that's incredibly powerful and should be shepherded and sheltered while we're in this phase of massive growth, not quelled and quashed and squashed, in ways that are not going to be productive for society ultimately.
Right. Sheila, you are an eloquent and highly sought after advocate. So congratulations on your new role. Looking forward to seeing what you guys get done. That was Crypto Council for Innovation CEO Sheila Warren. Coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
Hi, I'm Serena Lin, line producer at CoinDesk, and you're watching CoinDesk TV.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
After months of threatening to ban crypto trading, India has made a compromise, announcing instead there will be a 30% tax on all crypto transactions and a digital rupee to be issued sometime this year or next. Joining us now is Tanvi Ratna, co-founder and CEO of research firm Policy 4.0. Welcome, Tanvi. So, India isn't banning crypto altogether. Is this a compromise? Is this good for India, bad or neutral? What are your thoughts?
Yeah, thanks. It's great to be here. I think as far as the announcement goes, I think the finance minister has also issued some clarifications today. So this isn't really either a compromise or a clarification of any sort. They've said clearly that the regulation around what is legal, what is not on crypto will be part of a separate bill, which hasn't been tabled right now. She said very clearly, and I quote, that we're not going to wait for regulation to tax this. Right. There have been a lot of gains in India over the last, 6 to 8 months. There's been a lot of trading activity. So this announcement is really just focused on, putting a number to the taxation guidelines that are to be followed on whatever transactions are happening. It's quite a blanket, tax slab. It's similar to what taxation is levied on gambling, horse trading, and things like that. It's not necessarily a very good sign. It's not really something that's signaling, legalization or the government looking at this in a very positive light.
Hi, Tanvi. It's nice to see you. I guess the argument, though, is that, if they were planning to ban crypto, why bother taxing it, right? So I guess that's sort of the optimistic take on this, because India has suggested a crypto ban in the past, and the fact that they are announcing this about taxation at least is some sort of admission that crypto is something to deal with, no?
Yeah, I mean, I think, it's definitely not, it's definitely a step in the direction towards regulation. It's just not necessarily, the most positive step or the right step necessarily. The nuance here is that, in India, even illegal activity is taxed. So even if you launder money or you have something called benami property, you are taxed on it. You have penalties on it. And if you derive income from anything under our Income Tax Act, any transaction, has to... any transaction, there are taxes levied on it, whether or not it's a legal or illegal transaction, right? So if you really read into the fine print, and I think the industry has also started understanding this. There was a lot of concern from traders in India who were talking about how this is really going to diminish trading activity here, because not only is India levying an income tax, which is a 30% flat tax slab, but they're also levying a transaction tax, which is something we call the TDS. It's tax deduction at source. So every single transaction that happens in crypto is going to have a 1% tax levy on it, and it's not very clear just how that's going to be imposed. So every single trade you make, and you can't really offset your losses here, right? Like you can't. The rule is very clear on that. You can't offset any losses you make in trading. So it's quite heavy. Penalties. It's quite a heavy burden that I think the crypto ecosystem here has to bear.
So how you mentioned this just now, was that it's not sure how it's going to be collected. You're talking about the 1% transaction tax, but what in general, like who's going to get the burden of ultimately collecting that data? Do they expect, at least, is there any indication that they expect the exchanges to do it, or do they expect the individual traders to collect that data and to willingly submit it to the authorities? And are we seeing even some offshore solutions of traders looking to find a way to trade offshore and repatriate their gains back to India?
Yeah, those are great questions. So, our think tank essentially works on the regulatory aspects. So we work with different agencies. I've myself worked with the Prime Minister in the past. And so, just to give you some sense of how this is being thought of, even internally, there isn't so much by way of exemption in these rules. There isn't so much by way of tiers or nuance in terms of, this will be taxed differently or will be taxed less to any degree. When you look at what the ecosystem is doing, there was actually, according to data that we looked at in India, there's been a very rapid migration of capital out of Indian soft wallets that were in Indian exchanges and into foreign overseas wallets. The bulk of thinking, I think, within the policy circles is to rely on exchanges. And that is also something that is now under reconsideration, because DeFi, NFTs, the Web3 play is quite big in India. So at the moment, there's focus on the exchanges are very well capable of levying these transaction taxes, but it does hurt their business as well. Exchanges do make money out of transactions, right? And so the math on this is really going to affect everybody.
Tanvi, we're very lucky to have you here because you're an expert on central bank digital currencies. You authored a very, very extensive report on China's central bank digital currency. And so part of this new announcement is India saying that they are going to launch their own central bank digital currency either this year or next. What do we know about the digital rupee? It's a little bit mysterious to me. So what do we know about it?
Yeah, I think definitely on the digital rupee, the government's been vocal about their intent to launch it since 2019. So if you remember, there was an infamous report from the Ministry of Finance which recommended banning of virtual assets. But even there, it said very clearly that we are going to issue a digital rupee, and it had chapters on India's intent. And I think over the last few months, like not a lot of this knowledge is public, but we have done some work around the digital rupee, and there are certain pilots, features, functionalities that are being experimented with. So I do expect that the Indian digital rupee will be fairly advanced because, we are starting from a pretty good place in India as far as fintech goes. We have the India stack. We have an instant payment settlement rail, which is one of the most advanced in the world. It's called the UPI. And we have digital identity and stuff like that. So, a lot of the infrastructure is actually in place for India for rolling out a digital rupee, which is very different from other countries. So there is a lot of advanced experimentation underway. So that is going to be announced from what we hear from the second quarter of this year.
So given your expertise on China's CBDC, we can't let you go without asking one question about it. We're about to launch the Beijing Olympics. Now, there has been so much press about how the Beijing Olympics are going to be the showcase for China's CBDC. But, with COVID and other restrictions, it seems like that's gotten a little bit scaled back. What exactly do you think we'll see at the Beijing Olympics as far as the CBDC is concerned?
Yeah, I think that's a very interesting question. I think all of us, all the central bankers I know, are really looking forward to that. I think there were some trials within China, like they looked at some machines where you just put in Forex notes and you get the digital yuan on your app, right? As they have looked at this whole foreign exchange integration with the digital yuan. They have looked at the identity piece. How do you get foreigners onboarded in a verified way and things like that. So I think from their side they are quite ready. But yes, now you do see a lot of debate on the digital yuan. Even now, as we're speaking, Politico is holding a sort of Twitter Spaces on this, where there's a lot of controversy, right now around the Beijing Olympics. So I think at the end of the day, as we all know, it's not really the tech that's going to hamper CBDC adoption. It's really going to be politics. It's really going to be great power politics, right? And so I think now the whole CBDC and game has sort of moved into that theater as far as China is concerned.
All right, Tanvi, thank you so much for your insights. Appreciate coming on. I'm going to wrap it there, but that was Policy 4.0 CEO Tanvi Ratna. All right. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So sticking to the topic of India, there is a budget provision that allows the government to define NFTs. What's that all about?
Good morning. Yes, that's a very odd provision. So the budget basically, we were just talking about the tax implications. There's another line that says the government can specify basically cryptocurrencies, including non-fungible tokens. That's not a direct quote, that's paraphrase, but basically the implication here is that the Indian government might be trying to define what exactly NFTs are. And it could, just be nothing more, sinister than the government will define categories of NFTs, for example, historical NFTs. But you could also interpret that clause to mean that the government will be deciding if any given digital asset is an NFT, which is a little bit bizarre. But this was reported by our colleague Amitoj Singh, who was on CoinDesk TV yesterday, and a lot of exchanges in India are trying to parse through this language right now to determine which of these interpretations makes more sense.
Well, we invite them to look at our definition of what is an NFT in our Learn channel.
Well, definitely something to watch. They're formulating regulations on crypto taxes, a digital rupee, and now NFTs, the world's largest democracy. All right, Nick, thank you so much for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. All right, that's it for First Mover. Thank you, Emily Parker, as well as Lawrence Lewitton. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock with yours truly. You're watching CoinDesk TV.